Dollar strength is something that did play out when it comes to the TCS's earnings as well, because there was these cross-currency headwinds per se in constant currency, even though the rupee number looked quite inflated. To discuss that and more, we have Sandip Agarwal joining us on the show. Sandeep, despite the disappointment on the top line front, the street is not throwing in the towel on TCS yet, and I think that's coming in from the management commentary. Do you read it in the similar fashion?
Yeah, hi, good morning, and thanks for having me on the show. Yes, I think, there are two aspects to the result. One, the future looks better than the past in the sense that there is a substantial jump in the deal win. And also, management commentary suggests that there is a revival in consumer and BFSI. As far as the current quarter is concerned, obviously there was some miss. The revenue decline was sharper than anticipated. Obviously, some impact of cross currency was also there, and EBIT margins were broadly in line with estimates. But the key thing is that deal wins are very strong. The commentary is quite good, and most importantly, the stock has corrected quite a bit in last few weeks. So all these two things implies that most of the negativity is already in the price, and from here, investors will have a fresh look on the outlook how it is going to be, and from the outlook perspective today, based on deal win data and the management commentary, it looks to be better. But remember, this is a sector which is matured, so you cannot expect very big upsides like we saw in post-COVID. So these sectors generally tend to give 10-15% returns in a year only.
So Sandeep, have you reworked your price targets on TCS?
We run a PMS, so I don't work on price targets anymore, but I can tell you that the sector has done quite well in last 1 year, and we were extremely positive when during same time last year when numbers were not coming, salaries were getting salary hikes were getting postponed, bonuses were getting postponed. That was the time when there was extreme pessimism. Stocks were available at a much reasonable price, and this cycle-wise, it was looking that discretionary will open up in next 1 year. So that was the time, in our view, to buy all the tech stocks. Right now, there are very few pockets within the tech stocks which look very attractive. Obviously, names like TCS, HCL, Infosys, these are names which you can always buy for 8-10% return CAGR for a longer period of time. So depending on investors' perspective, obviously, it can be a call of the investor, but right now, they are not very cheap, to be honest.
Yeah, but will the TCS be the heads up to what we should expect in terms of the earnings this quarter? I mean, the revenue weakness that we have seen, and even Tata Elxsi came out with numbers yesterday. What a disappointing set there as well. The expectations that the street had about HCL and Infosys increasing their guidance a bit. Do you think that gets negated now, and this quarter revenue execution is going to be weak across the board?
So this is a furlough quarter, so obviously revenue execution cannot be very strong for anyone. But remember that, all these companies have presence in different geographies and different segments. So HCL Tech particularly will benefit in this quarter, and they will have a good set of numbers. Infosys, again, is similar to TCS, and I would not call that it will be very strong quarter because there is manufacturing concentration, and manufacturing goes through furloughs in this quarter. So, and to your question to Tata Elxsi and KPIT, I think those stocks, because they are in a sector which is going to do well for a decade, almost ER&D is one of the best sector within the tech services. I think that is the reason the multiples are very high premium, and whenever there is a little disappointment, these stocks do correct significantly. So we are going through that.
Okay, Sandeep, good to have you on the show and analyze TCS's performance. 8:45 is when you can catch the entire top brass of TCS right here on ET Now.
If you like this video, then like, share and subscribe to ET Now.